Next, you need to break again. There's a high chance of breaking. Break for 1 and 2. The first break and second break. You can easily go right in. Is it easy? Hello everyone. Today I'm going to show you the easiest Bollinger Bands trading technique I've ever developed. The advantage is that besides being easy, this technique can yield a profit of up to 360% within just 1 year. As always, you don't have to believe me, but trust the statistics. So let's take a look at the test results first, and then we'll see how this trading technique works. If you like this kind of video, don't forget to like, share, and hit the notification bell so you won't miss any good videos in the next episode or stop receiving them for free. You can get the technique via line at Chen Trend School on screen. If you're ready, let's go. I tested the system in the year 2020, a complete duration of 41 years. Now let us take a closer look at what transpired. But first, I must highlight that I tested this system on a 1-hour time frame gold chart, utilizing exclusively the Tick Broker's chart. If you use a different broker, the results could potentially vary. The reason I use the Tick Broker is due to the fact that it is an exceptionally reliable broker, as it possesses an FCA license, which is considered a standard recognized throughout Europe, and it stands as one of the premier licenses in the Forex world and is acknowledged on a global scale. Therefore, in terms of deposits and withdrawals and the safety of the principal amount we deposit, there's no need to worry. Additionally, it has very low spreads and commissions, making it suitable for trading, whether you're trading with an EA or manually. My main account is with this Tick News broker. Okay, let's see what happened. I tested this system using a research per trade of 5% with an initial capital of $10,000. The risk-reward ratio remains the same at 1.5 times. The test results were very effective. You can see that my Bollinger Band strategy today achieved up to 65% from a full year of testing. The total profit was 364% with a total of 52 trades. That's about 4 to 5 trades per month over the course of a year. This is considered a trading system that doesn't trade very frequently, but it can still turn a profit interestingly. The profit factor now is 2.83. The maximum drawdown, even though we used a relatively high risk per trade of 5%, was only 14.26%, as I mentioned earlier that if you're going to use any system, don't just believe it when they say it's good in this way or that way. We need to conduct tests and experiments. We discuss with statistics because in trading, statistics are very important. They keep you from losing your way. And so trading according to the system and statistics will definitely lead to profit. And I'm confident. Let's see how we can set up the Bollinger Bands to achieve a profit of up to 360% within a year. Today, I have good news for traders who already have an account with Tick New Broker or are deciding to open an account. Cham Test School has partnered with Tick Broker to launch a quality trading signal room, AI Master Signal, which you can use for free. It provides real-time trading signals covering both the gold and Forex markets. It uses the latest AI version tested in real markets for over 5 years, generating a total profit of over 1,000%. Joining is very easy. Just open an account with Tick New Broker through the link below the video, deposit $700, fill out the form to join the signal room, and then wait for the team to verify. You will be invited to the room immediately. Don't wait. Golden opportunities don't come often. AI Master Signal is the trading assistant of the future you can access for free. The technique we will use today, the template uses only one indicator, which is the Bollinger Bands. The Bollinger Bands consist of the upper band, middle band, and lower band. Each line is simply a moving average, nothing complicated. Many of you have used it before, but today I will teach you how to use it profitably with statistics to back you up so you can be confident in the system you are learning with Play School. First, set the parameters correctly, because if you set them incorrectly, it will change. For the Bollinger Bands, I use a period of 30. As for the standard deviation, it is usually set to 2, right? Adjust it to 2.5 as shown here. That's all there is to it. The Bollinger Bands have many techniques for trading, whether it's looking at overbought and oversold conditions or observing divergence. But today, I will teach you a technique that involves looking at just 2 candlesticks, allowing you to trade immediately and achieve over 300% profit within a year. It's very effective and So the important thing is that it's very easy, perfect for beginners. And let's look at an example of an uptrend first. Singapore trading involves only 2 steps. I told you it's really easy, very straightforward. You can see it quickly and start trading right away. Let's see if it's really that simple. The first step is to look for the first break, which is a candlestick that closes above the upper band. It's that simple, nothing complicated. It hasn't broken yet. For a break, it must close higher. For example, can you see this candlestick? It can close above the upper band like this, which is the first step, or what we call the first break. Next, step 2, which is easy and even easier, is that there must be a second break or another consecutive break. If it doesn't break, you have to start counting the steps again. You'll notice that here it didn't break. It's a red candlestick with selling pressure coming down. It didn't close above the upper band, also nowadays. So you have to cancel the first break and look for the first break again. All of it is here now. The first break appears again in the next candlestick. This is the first candlestick. So we have to watch for the second candlestick. What happened with the second one? It got knocked down again, which shows that it didn't rise seriously, right? Because if it were a serious upward signal, NED, there would have to be at least 2 consecutive breaks, right? And then the price falls, see? This technique is good like this because it's a filter. Some people play when it breaks. As soon as it breaks the Bollinger Band, they enter immediately. If you enter right after the break, you'll definitely get caught because the price is flowing down. We need to look for the next first break. Let's see when it will happen. This candlestick is okay. Here comes the first break in the next candlestick. This is the first bar. Next, it needs to break again, and there's a high chance of a break. Break 1 and 2, first break and second break. This is step 1 and 2. Follow like this and you can enter. Easy, right? Just consecutive breaks like this. The stop loss is placed at the low of the first candlestick of the first break. As for entering, you enter when both are closed. That's all there is to entering. For the risk-reward ratio, measure it at 1.5 times. Calculate the risk carefully. I use 5%, but you don't have to follow me. Risk is a personal matter. The next question is about what to do along the way. If it breaks upwards, what should we do? Let's take a look. This is the first break. This candle is still open. It's open in the afternoon and hasn't hit the take profit yet. Then there's a second signal, which is the first break. Let's see if there's a second break or if there's a continuous break. There is, because the closing price is higher. In this case, you can place an additional order, but you shouldn't place more than 2 orders as per the closing price. Place the stop loss at the low of the first candle. Orders may overlap and the risk-reward ratio should remain the same. At this point, the observation is that the first trade has already hit the take profit and the second trade is about to hit the take profit as well. Okay, you can record the score now. So 2 trades have hit the take profit in a row and you can see the advantage of breaking twice. Now, clearly, at this point, if you follow the trend immediately, there's a chance you might be deceived or face a sell-off. Therefore, I recommend, based on statistics, not just making things up, that you should use a double break or break twice consecutively. With the first and second candles like this entering an order can yield a profit of up to 360% within the past year, which is 2024. Let's continue with the downtrend. Earlier, we focused on the uptrend at the top. For the downtrend, we need to monitor the lower rover band. Whenever there is a first break or the initial break, the closing price must be below the band. That's when we start monitoring. If it remains stable in the middle, we don't need to do anything. If the price pulls back and then bounces back down to close below the lower band, this is considered the first break, Therefore, we need to follow up. When the second break occurs with both the first and second breaks, the closing price is again below the lower band. At this point, we can enter an order, enter at the closing price and place the stop loss at the high of the first candle. I hope everyone understands that it's not complicated. In fact, I think this episode is the easiest I've ever done with Bollinger Bands. Are 1.5 times like this on a 1-hour time frame. Emphasizing once again, the take profit has been successfully achieved. You see, it's not complicated and it's not difficult. Let's continue. If we're going to continue, we need to see whether it breaks upwards or downwards. You'll notice that right now it's hovering in the middle, not going anywhere. So keep your hands steady. Here it starts from the script or the band is starting to converge, indicating that it's in a very tight sideways movement, which is quite frustrating. So there's a chance it could break into a trend and go far. We need to keep monitoring to see which direction it will go, up or down. Don't speculate, just react according to the market. It almost broke downwards but didn't, so keep your hands steady. This one tricked us. This one, however, truly broke and closed below the lower band, but don't believe it just yet, as I mentioned. We need to wait for a double break, meaning it needs to break again. Is it done yet? It's done now. It closed below for 2 consecutive bars. In this case, there's no need to overthink. Whatever others trade, let them be. If we stick to this system and there's a double break, then go for it. Open a sell position, be yourself, have your own system. That's the best, because it will help you understand the reasons behind your wins and losses. If it still follows the statistics, then there's nothing to worry about. TP is done. Let's continue. Here, there's a break, one break, but there's no second break. See? So we don't enter. Here, there's no break at all because it just teased a bit at the lower band, so we stay still. The price returns to the middle band, indicating that the graph is sideways. There's no need to do anything yet, but wait for a good opportunity, because whenever there's a sideways movement, the next cycle will be a trend. It can't escape this. The trend only consists of sideways and trending. This seems to be the real deal. Really, break the afterband, prepare to play the upward leg. If there's a double break, then it's a double break. Once you see a double break, don't overthink it. Let others worry about selling against it. If we stick to this system and do our homework in the back test it, then we open in the afternoon. Don't be afraid. Don't worry about buying too high or anything. If you're afraid, it means you don't have statistics or knowledge, I'm telling you. Those who are afraid, it means that you're trading without knowledge. If you have knowledge, you won't trade out of fear, but you'll trade with understanding. It may take up to 2 days. With a TP of 1.5x, you get the full amount. Example, 3 trades, 2 down, 1 up on the graph. There are trending, RE, and sideways periods. During trends, you profit again. During sideways, take a break. In trends, profit again. Simple. If unsure, open the chart and set values as I suggest. I think it broke 2 consecutive bars, didn't it? It's really the easiest. But you don't have to believe me. As I said, trust the statistics, and importantly, I recommend you test and experiment on your own. This way, you'll gain understanding and see a lot of market conditions. Right now, I'm skilled on my own, but I want everyone to become skilled too. Okay, for today's video, if anyone tests and experiments, let us know the results in the comments below this video. And if you like it, don't forget to like, share, and hit the notification bell so you won't miss any good clips in the future. Upcoming videos is sure to be fun. For today, I'll say goodbye. Thank you much. Goodbye.